intestines and your organs, your liver, your gallbladder, your spleen, your stomach, all the above, even your kidneys, your adrenal glands. And just give the additional life force back into your body. And
I don't even know where my adrenal glands are.
You don't? So they're like little buttons, some like right above your kidneys on the backside.
On Iran deal.
So you're supposed to like visualize them?
Sure, if you can. I mean, you can even visualize as you're taking your, well, let's shift once we go into the visualization into the body after the breath work, which we're 1 more minute in. 1 more minute left. Then keep breathing, folks. So breathe into your belly, and then if you can, breathe into
we go back and finish
your solar
it. Maybe
plexus, which is again where your ribs meet, just above your belly button. And then breathe into your heart. And notice that inhalation you expand, and your exhalation you deflate. And then we'll go into the visualization in your body, and then I'll run through that for you, Lauren. And just notice how you feel having taken one intentional breath versus if you hadn't taken any breaths consciously with intention previous to our focus just now.
Just repeat,
you feel better, more relaxed.
You cannot have a nuclear weapon.
More connected to yourself, away from any kind of exhilaration or desperation or frustration, any type of emotion that you've experienced, good and or not so great, in front of the screens.
Yeah, feel more grounded.
Yeah, for sure.
More present, yeah.
Kind of can feel your toes, and your shoulders have like come somehow dropped away from your ears. Yeah. Okay, so then we'll move from breath work, and really this is the precedence I would like to set for each session. At least on the mindset side, we'll always go through breath work. We'll always go through a quick body scan, and then we'll go through the activity discussion of what topic Lauren and I want to talk about the mindset side. So let's go into the body and let's do a quick scan. We'll start at our feet. So again, you can close your eyes. You can shift your gaze lower, just soften, and just tune into your toes. And we'll do side by side. So maybe start on your left side and wiggle your toes, your right side, wiggle your toes. And notice that even the action of wiggling your toes may even draw more intention to want to rotate your ankles one way, the other way. So again, this is your body, which we only pay attention to our bodies when we're working out or meditating intentionally with a body scan. So, and working out being walking, yoga, strength workouts, all the above. But let's tune back in. So we're drawing our attention to the bottoms of our feet, tops of our feet. And as I'm talking and you're drawing your intention and attention to these locations in your body, maybe you feel that energetic flow. Perhaps it's your blood flow, it's energy, maybe your lymphatic flow. Maybe even your cranial rhythm, if you know that. And then moving up to your ankles, your shins, your calves. Sometimes you can feel the energy in its vertical, sometimes it's horizontal, sometimes it's swirling, and sometimes you can't feel anything at all, and that's okay too. And then moving further up to your knees, front, side, back, both left side and right side. So lateral side, medial side, so to the inside and the outside. All the way up to your quads, your hamstrings, your IT bands, all the muscles that exist within those quads, the driving force of your legs. And then into your hips, your glutes, the bones too, so your pelvis, your lower belly, your back, lower back, your mid belly, your upper belly. So the organs that exist on your upper belly right side are your liver and your gallbladder. And on your left side, it's your stomach, spleen, and pancreas. So sometimes stomach is somewhat in the middle. And correct me if I'm wrong, folks, but and just draw your awareness into your organs and just, if you can, give them a breath intentionally to your liver, intentionally. And you don't have to know exactly where they exist, but the intention of focus, drawing energy and breath to your organs is such a good sign and supportive sign of life force to them. I promise your body appreciates it. And on the back side, as we just discussed, that's your kidneys on either side of your spine, as well as your adrenal glands. They keep your energy up. And when you keep them up and you're stressed out, you deplete your energy. And usually it's your adrenal glands to take the fall for that. But draw your attention and your life force, your breath, all the way to your backside. And then your mid back, your upper back, your chest, your heart, all the tissues, all the lymph nodes, your armpits, your shoulders, your upper arm bones, your elbows, your forearms, your wrists, your fingertips, your thumbs, your palms, the tops of your hands. And just notice if the energy is coming from your heart center. If you're really in tune, it could go all the way down your arms, out to your fingertips. Doesn't have to stay within the body. And then go ahead and focus onto your neck, front, side, back. And then your jaw, so release your bottom jaw from your top jaw. You'll notice that somehow you've been clenching. We're all guilty of it. You can release the tongue, your tongue from the roof of your mouth.
Just a reminder, we do have
Somehow it
5-year
gets
supply
stuck up
coming
there.
this evening out of the US.
And then you soften through your cheeks, even your ears, your eyes, all the muscles in your eyes.
Preview that a little closer to the time.
You can even breathe into your eyes and notice how that changes and relaxes your muscles there. Your forehead, those nice 11s in between. Relax those. Your scalp, and then the top of your head. And take a deep breath in and exhale it out. Awaken your gaze, and let's get ready to rock and roll on this mindset. So thanks you guys for joining. I hope you feel better already, different type of focus. And that really brings to what we wanted to share today. I created, I created, let's see, another worksheet, because I think this is what I've been missing for myself all these years. And while I say all these years that I've come back to trading, so since 2019, 18, 19, and then previously I started trading for myself in 99. So this is really important to me. I've been working with David and PTG, and through our conversations, it really, if the aha moment I've been waiting for to be able to commit to really is portrayed in this sheet. So because I am somewhat of a scalper and a position scalper at that, I've needed to really hone in on my grading of my trades, and then also on my downside stop and what's going to really support me in my profitability throughout the day. And I think for me, and perhaps this may help you guys, I've broken the day into 3 sessions because I happen to really enjoy trading the evening session. And then as much as I love the chaos in the morning, it also is straight chaos. And so sometimes I enjoy it and sometimes I don't. But needless to say, I've broken it down into sessions, and I've broken it down into your profit goal, my profit goal, a downside stop, and a risk per trade. So that's right front and center. So let's say if you have multiple accounts, if you're a prop trader, you trade your own account and prop accounts, you can list your accounts. There's 4 spots here. And then let's say using numbers, the session target, my profitability target is 1285. It's just a consistent number that I know I can come in more consistent than most. That is a number where I feel good at, no matter what session of the day it is, no matter what type of market it is. Risk per trade, typically I'll take 160. That's my sweet spot. I know my average winners to losers. My average winner is about $360. So I know that 160 is okay. It's larger than I'd like, but it's fine. And then the loss limit, I've figured out through our conversations with David that 642 happens to be a good loss number. While it's half of my session target, you understand that, but I'm really into numbers and numerology and the spiritual meaning of things. So I know the meaning of 1285, 160, and 642, and they align with who I am. Okay, so, and I can go into that at a later date, but here or there. These, if you do choose to use these, they should be, they used to be editable, so I'll make them editable. These are my rules, and perhaps they may even help you. But moving on, so I broke the day into sessions to help me realize that if I'm down in one account in the morning session, that it doesn't ruin the opportunity throughout the day, where perhaps you feel the same way, that if you are down in the morning, if you start your day in the morning, that you're just trying to make it back and it just gets worse and worse and worse. And you lose sight of the true, authentic opportunity that the market is presenting you because you're too focused on trying to make the money back. So if you stop yourself in the morning and know, hey, afternoon, the market will directionally set itself. It'll be easier to see opportunity. I'll just stop, let go, and I'll come back. I'll remove myself from my office. I'll step away from my desk, go do something else, and know that later in the afternoon will present another opportunity for me. So hopefully this helps you guys. Does anybody have any questions so far?
No, I think it's great. I used to spend a lot of time digging a hole between 8 and 8:30 and then trying to get it back from 8:30 to 10:30.
Yeah.
Just getting back above ground.
Yeah. And it's, really, if you had started to trade between 10 and 10:30, perhaps you would have seen clearly what the market was trying to do.
Yeah.
So, of course, listing the bias, I start the day from the evening prior, which is the new trade date, obviously 5 o'clock when the market opens. So the sheet starts at the evening. So I'll just start here. So you can still list your bias of the market. You can tell yourself where it is so you can see the key level to watch and your focus for that session. The accounts that you put up here, we'll just do 1, 2, 3, 4. And you can name them too, but it automatically loads in the box. So let's say you made 1285 in this account. Your winners to losers were, let's say, 3 to 6. 3 to 6 because you ride your winners. And then again, like 343, and maybe the average loser, was 123. Okay. With a limit of, see that downside, you still have that limit, 642 limit, and now it's positive because it's your trailing stop. Okay, so let's say in the second account, I was down 770, the system hit me out. It hit me out a little bit further than 642, which typically happens if it's a downside. Obviously, let's say 0.5 for 0 winners. I had 5 losers, just wasn't a good morning for me. And just my average loser was, let's say, 225. I mean, that's bad math, but you get.
You may want to talk about or ask if anyone's trading multiple accounts, and then maybe why you trade multiple accounts or what you if that helps you, kind of what the thought process is there.
For sure. Now, does anybody trade multiple accounts? We'll start there. No. Okay. So some people I know trade their own money and then have prop accounts. And I also know that there are those who do trade multiple accounts. Why do I trade multiple accounts? Because I want to be able to master any type of market in any type of day. And if I don't see it in one account and I'm down my limit in one account, that means yeah, I know, same, Outlaw Hunter, same. But if I don't see it in one account, my timing's off, I know that I need to pause. It's a better gauge for me to pause in that second account than it is to keep going and have a bigger downside. Because I won't stop, I'll continue. I mean, I've been in it long enough that this is a better, healthier way for me to do it. It stops me in my tracks, and then I can refocus into another account and my timing will be better. If that makes sense. Oops, sorry. Okay, so then it also will total your trailing from the session before in the top right corner. Goes through, you can see, so now there's an opportunity to extend. So let's say the market's the momentum, you're on your game, and you know that 1285, wait, how many consecutive losses do you recommend before stopping? It's always been a 3. For me, 3 losses in a row, you stop, you take a break. Now that I've battled with the number 3 versus how many times do you attempt a level? That's different. So that could be anywhere from 7 or 8, but 3 losses in a row, hands off. Yeah, it's easy. I mean, this is it's easy to tilt, and this is why trading is hard. And not many people understand it or really want to do it, because these are the things that need to be addressed, and you're facing yourself and your actions, and whatever's driving your actions, good or not so great. So the extension side of things is when you know that the market, you're confident in your execution, you know that the market is moving enough that you have the ability to extend your profit goal in the moment. And you can select that. Things have to be in place. The market trending, it's not chopped, the catalyst is confirmed and active, and the last 2 trades were winners. So those are the conditions for me in order for me to say, okay, I'll extend my profit goal. I'm looking for more than 1285.
Rubio, diplomacy is always the first option. Trump
usually typically happens in the afternoon session versus in the morning session. It happens sometimes, but it's usually by the afternoon if I'm ready to extend.
Rubio.
I'm not saying it happens often. I'm just, okay. So net position, and it totals them out. And right now, 0 out of 3 goals, the 3 being the sessions, have been met.
We'll see in the next few hours.
We're looking for
days about Iran progresses, Rubio.
And then, of course, you can mark your discipline, your patience, and your emotional control, because I think that's always important to mark it. And then a rule that you broke today or something that you're carrying forward, and then you are able to sign it and date it. And I like to print it, save it as a PDF so I can review it. So that is my latest sheet that I've added to the daily, the worksheet when you log into Trade Anchors. And if you scroll down the tools, it's under Session Tracker. Any questions? Okay. Laura, do you have any comment?
Yeah, I think it's great.
I think I work off of this one most out of all of this. You just go to here. It's tradeanchors.com. Let's see. And then you log in. We don't. Nothing is held in a database as of yet. So this is all locally stored on your own computer. And then it'll save the information until you click New Day. Okay. Good. Everybody good? Going once, going twice, gone. All right. Thank you. Laura, you up?
Yeah, I'm good. Let me share my screen. Okay, we can kind of go through, cycle through what ags have done since last week. Crude obviously has been the most volatile. To me, I'm seeing more of a range-bound trade, support around 85 to 86, resistance, I feel like we're trading in a range between 85 to 100. If you want to look to trade the downside, look to trade the short side above 100, and look to trade the long side closer to 85, 86. That's just kind of how I'm seeing it. But with crude slide past couple days, has weighed on the ags. So corn has slid this week, end of last week. Yep, last week and this week.
Rubio on Venezuela says 10 million barrels of oil delivered
like
to
a
the
head and
US.
shoulders,
Stabilization,
maybe setting
recovery,
up.
transition.
So
Go on,
here
says
would be
Rubio.
the left shoulder, the head, and then maybe if we kind of hold in here, potentially working our way back up for a rebound, maybe another test of the $5 level. This is on D-Scorn, and see if we can confirm that, and sell back off, or if we, take that out, take out $5.
Also on Cuba, Rubio says we'll be working on it.
So right now we're
needs to
looking
be a
at
good outcome there.
long
Hopefully there'll be a good
strategies
outcome
down
for
here.
them.
We've held this 480
Click
level
on,
a couple
Cuba.
times. So that's kind of what we're looking at on corn. So we'll be looking at long calls, call spreads, structures like that, short puts versus long calls. And then wheat, kind of same thing, potentially holding in some support here. And also is the upper end of this range back from March. And soybeans look a little less toppy and a little more sideways. We kind of had a correction. One thing that has been a big mover last week were the cattle market. So sold off hard. Live cattle didn't correct quite as much as feeders did, but feeders were down hard Thursday and Friday and have corrected back. If you look at this, let's see, continuous contract, that's not the right one. So we make this a little bit easier to see. So this is the average daily continuation.
Just be aware,
we opened the year
at North America. Just before that,
345.50.
Pakistan PM office.
So we've held it when we corrected in March. We held that yearly open.
It's just really reporting on what we heard from earlier in the day.
And then here on Friday, we held it
between himself and
yesterday.
the Iranian President Masoud.
And then we also are back, trying to get back above the 200 day.
Reuters is just publishing
So,
there.
200 day has kind of been that long-term trend. So
Prime Minister.
are we rolling back over? And have we put in kind of a major high? And this is just a short-term bounce, or are we holding more general, this uptrend of the 200-day and working our way back up on this trend. I don't know, but that's kind of something to watch. Could be a major wedge also, but that's kind of what's moving there on the feeder cattle, and then live cattle, kind of similar pattern.
Here, Laura, hold on, because we were just talking about, you and I were just talking about this also. So Slatitude said, sort of glad to hear I'm not the only one digging out of the hole out of the gate that needs to be overcome to get to positive. I think that happens to all of us at one point or another. The key is to understand that it's not so much the digging out of the hole, it's knowing that there's more opportunity later. And this may not be the period of time. So that feeling of catching up has a chance to pause and really curb into more of a positive thing than remaining in a negative state.
And I think when you're
seeing some
digging that
details of
hole,
the phone
you're
call
trying to
between
prove
the
to yourself that
Pakistan
you can do
Prime
it.
Minister and
You
the
know
Iranian
that you can do it
President.
because you've gotten back up.
Pakistan's PM
Spend
Sharif said
the
that he
first
hoped
30
that the
minutes to
peace
an
deal
hour
with
digging a
Iran
hole.
could
You
be
spend the next 3
finalized
hours
soon.
just getting back to break even. And you're like, well, if I would just not get in the hole to begin with, I'd be gravy because I know I can do it. The problem is not chopping yourself up in the first place.
Well, and knowing that if the loss is small, knowing like where your threshold is in the loss. I know if I'm down 642, the likely that the rest, the next 20 minutes of execution is not going to be great.
Mm-hmm.
That's my threshold. That's my personal. It used to be 775. And then I had to curb it even tighter. And so throughout the conversations,
Trump says he's working hard to get California oil reserves open again.
I think that whole concept of digging out of the hole, I think it's, really, if you can reframe it, remember that abundance lack sheet, reframe it to where's the highest probability of opportunity for me? And if I'm down right now at this moment with this much, likely it's not now.
Mm-hmm.
And then knowing to take a step back and maybe focus on your breath or tune into your body or get up and walk out or, know it rather than digging the hole. Because if you're down, you're down. That's not digging a hole. You're down. That's a part of the job. You're going to take
part is when you're down in like 5 minutes or 10 minutes. You're like, how did I just do that so fast?
Yeah. I mean, I got hit this morning in one of the cell programs. I was like, well, I hit my downside stop, and I was like, well, what do I do? Nothing. I wait.
Mm-hmm. Yeah.
But it's not my, in my head, but it wasn't my fault. It was a cell program. It was just, and I'm like, but no, this is what we're doing here. This is your downside. Look for opportunity later. Afternoon session, evening session, just not now.
Yeah, or tomorrow.
Yep. Or tomorrow. Sorry to interrupt, Lauren. I just wanted to make sure we address that.
Any specific ags that y'all want to look at, or you want to go over and work on some options?
I feel like that feeder cattle, that is huge. That's a big drop.
Yeah, it's huge. Yep. So if you look at, let me find the continuous. Here we go. Continuation contract. So zoom out. I mean, we're at all-time highs. Very strong bull trend, the monthly chart.
Mm-hmm.
I mean, even just this month, we made a almost new contract high, all-time high. And trend is still up, but we're obviously getting into a lot of volatility up here at these high levels.
Yeah.
So at some point we're going to, something's going to look more like, this.
Uh-huh.
So are we starting that now that we've rolled over? Or is this just a pullback and we continue on our trend? That's the $1 million question. So.
And that also shows how important it is to not only look at short term, but also look at further out long term to see exactly
where are we?
Yeah. What actually is happening.
Mm-hmm. So, to me, we've got to overcome kind of like this level here. And then obviously first. And yeah, this could just be kind of a corrective rally on a broader term. You know, maybe the trend has rolled over, or maybe it's just a pullback. And then obviously we've got to get above, you know, these old highs.
And what's with that gap?
This gap
Lower, all the way down.
right here, or this one?
That one. Yeah. It just,
Yeah, that was just Trump headlines.
Mm.
Bullshit. So yeah.
Haven't heard you swear in a long time.
Yeah, you name it. I mean, whatever.
That's so fascinating to me.
Yeah, I was looking at, let's look at a strategy. Let me see. It's not what I wanted. Here we go. I was talking with someone about this strategy yesterday. So feeders are a good one to kind of press it up on. I call it a back spread or a slingshot. So we're going to sell. Let's look at puts. Say we have put in a major high and we have a correction back down to, correction back down to this level. Yeah, the high from 2024, yearly open from 2025, roughly like 270. So almost $100 pullback would be a huge correction. But let's say we have seen a major high and we're going back to that level. I'm not saying we are, but let's just say. So we could sell an at the money put and then buy 2 or even 3 if you can get it right. But it's got to be, you've got to have a huge move. Let's see, 2, 3. Okay, so no cost on the option strategy. Let's make this bigger.
A thinker in what way? A better thinker in what way? Latitude.
Okay, so we're selling 1 at the money put. We're buying 3 out of the money puts. We're doing it for a 17-cent credit. So basically no cost. 17 cents is, $90, $87. So if the market goes up, we're not out anything. If the market goes down, it's got to go down in 90 days and it's got to get below 320, 315 for it to break even. Otherwise, you have this huge drag where you're losing money. And so I'm not saying this is a good strategy. I'm just saying it's a strategy if we're expecting a big move. So then now you've got, you're selling 1, you're buying 3. So you've got your delta on the way down, you're short 2 contracts. So you're really, so if you're a delta, 100 delta long or short would be like a positive 100 delta would be long 1 contract, negative 100 delta would be short 1 contract. So a 200 delta, you're essentially short 2 contracts on the way down. And we were looking at this, so it's going to double your downside if we do get that huge move down to 280. Now, is that going to happen in the next 90 days? Probably not. But let's go out to like next March.
I feel like you could have done this on the reversal for the indices once we went into war, right?
Yeah. Yeah, let's look at, just out of curiosity.
Sure. Take your time, Latitude.
And where are we at right now? We're at 75.34. So let's just say, 75.25 put to buy 3. Get this down to 2. So, I mean, in a lot of option strategies, your goal is to spend as little money as possible on option premium. You want to know when you want to spend money and when you don't. So when you get into more complicated strategies, you're looking for, how can I spend as little money as possible, but still get that directional move in case if I'm wrong, I'm not just spending all my money in option premium. So we're going to have to go farther out of the money to make this cheaper. Right now it's going to cost 77 points. So let's look at.
It's way too expensive for an option. You may as well do the real contract, right?
Yeah, that's 50 points. So yeah, this is a strategy more for like, I mean, yeah, you want to do it cheap and you're banking that we get a big move and you're banking that you pick up those deltas, 2 to 3x on the way down or up. But we could go even farther out. So here's something relatively cheap. So it's called a slingshot because if it really moves, you're double or tripling your deltas on that direction. You just don't want to end up here where you've got your max loss at expiration. 30 days to expiration, 60 days. So these expire in 22 days. You wouldn't want to do that. I guess if you're super bearish, you could look at doing it with time. December, where's December at?
What's that? What did you just say?
You could do it in the December if you're bearish, super bearish. Dece is at 76.48. Not even sure you could get filled on this, but I mean, I don't know where you'd have to be super bearish for this to be worth it.
I think
Here we go. So
yeah, personally, that might be a little too far out, right?
Yeah, this is a strategy you want to do that has a lot more time value left. So you wouldn't want to do it on like the front month.
Mm-hmm.
So we'll also look at doing, this is something you want to do when there's high volatility because you're selling that at the money option and you want to capture that high volatility. Some other ratios we can do in periods of low volatility. And I'm not saying that these are good, it's just tools in your toolbox that you should know about. So we'll do a call spread. Let's do like
New Hungary Prime Minister Magyar is slated to meet European Commission President von der Leyen on
Where
Friday
are you looking
in
for the
Brussels.
volatility? Are you looking at the specific strike and the
Texas
vol
says no
in that
Iranian
strike,
tanker
or
around the globe is safe.
on the
you
call puts?
can.
Are you looking at? I mean, you're not looking at VIX.
I'm not looking at anything at the moment, just off the top of my head.
Where can someone find that to check it?
So in CPG, depends on your platform, but
Yeah.
Like right here, I'll go to corn.
Mm-hmm.
And I'll go to quote, and it'll show me volatility is 26.
You can see it up top too, right?
Yeah, and then the delta is 53. So, you're at the money
Mm-hmm.
option. And then if you're going, we're at 26. So we go out of the money, like a $5 call. Your volatility is 26 still. And your delta is a 30 instead of a 50. So people that you're getting out of my wheelhouse, but there's a lot of arbitrage to do to find maybe something's mispriced, and these out of the money options have a relatively high volatility versus the in the money, to try to scalp that. But let's go to, what's our high? Where do we get to?
For indices,
Mm-hmm.
for S&Ps,
Yeah.
70, 75.
Okay.
75, 70. 70 in the orders. Yeah, especially as a skill that can be developed, enhanced, empowered, and expanded. I agree. It's always a work in progress, never ending.
Okay, so simple call spread would be buying one and selling one. So instead of having unlimited upside, you're gonna have a range of upside. So we're buying the 75.50 call, selling the 8,000 call. I wouldn't do that because you're only bringing in 2 points. So let's do 7,800. I'm just making up numbers here. Let's go to 76. Let's do 100 points of upside.
What are you doing, 76, 77?
Yeah. So 100 points of upside for 32 points. And then we can also go with these cheap out of the money call spreads and do them on a ratio. So like we'll buy one call spread closer to the money. We'll go out of the money. We'll buy 3. And this is called a stacked call spread. So these really cheap ones, let's do like 78.50. And probably not a good example for something with 22 days left, but they can be cheap. 78.50 to 8,000,
I gotta write this down.
So you'd want to do this on something where I can take a screenshot too. Out of the money options are really cheap. In the money options kind of have a bigger threshold to overcome. And then if you look at your deltas, you're accumulating those deltas a lot more when we get that big move higher. So let's think about this real quick.
Wait, Lauren, will you say that? Will you share the strikes again?
I mean, and this is probably a really bad example. But 76 to 77, 7,600 to 7,700 call spread, one by one, and then buying the 3 of the 78.50s to $8 call spreads.
Okay, thank you.
Something else we can look at, and I'm just kind of rambling, so these are just general strategies. Doesn't mean they're the right, doesn't mean you would want to take them in this environment. But let's say we're going to spend 30 points. So
after we do this, let's do something that is realistic. For June, or excuse me,
for expiration.
March, March expiration or June expiration.
So let's just say you want upside, 100 points of upside for the next 22 days when these expired. So 75.50 to 76.50. And that's going to cost 43 points for 100 of upside. So I'm writing this down. And it's going to cost 43 points. So let's see. And then let's just say at 7,700, we're going to make $2,800 net. And let's just see if we can play around and we can come out, get something. It's 7,700. So let's say instead we buy like 76.50 to 7,700 call spreads, these cheaper ones, and they're 15. So we buy 3 of them. We spend the same amount of money. Let's see if that overperforms. So we're coming farther out of the money we're doing more. So we're buying farther out of the money, lower delta, but we're doing more of them and spending the same amount of money, 45 versus 43 points.
Yep.
And at 7,700, instead of making 2,800, we're making 5,200. So it does outperform by doing those stacked. So those are always things to look at too. Now, do we get up there? In 22 days is the main question, because you still have that sunk cost of your 45 points.
Yeah.
Yeah.
I like that. I would have never, I mean, like in all my experience, very little experience having started in options, but still I understand. I wouldn't have thought, okay, let's just add the quantity, take it further out of the money, same cost, but
yeah, if I'm
figure
going to
out
spend the same, am I directional? If I maxed out at 7,700 on both strategies, so my bias is that we get there. Just say, I'm just making up numbers, and I'm willing to spend 40 points to 45 points. Well, I'm better off to go a 3 farther out of the money than I am at the money, because you're paying more for it.
yeah. I like it.
Yeah.
What, so,
Let's look at it on the put side.
yeah, Latitude is writing quite a bit. So I'm aware that the likelihood exists that I'm remarkably complacent about my thinking to avoid responsibility. Historically, I've not defined my problems in life as resulting from my thinking. Amazing. Yeah, for sure. One's ego is not necessarily looking out for me. Practicing awareness and observations shines light on the illusions that run rampant. I'm making progress in determining if my beliefs are beneficial, not necessarily true. Yeah, I mean, what stories are we telling? You know, is the story true or not? It's entertaining to write down beliefs. I'm up into the hundreds. Yeah, it's so fascinating as we get older too. I mean, I remember there was a period of time where I really had to define my belief system and who it belonged to. Was it mine? Was it societal? Was it generational? Was it from my parents? Was it from my DNA? You know, you could go down the rabbit hole, but certainly practicing awareness and observation through meditation and, you know, doing the shadow work, whether it's through journaling or talk therapy or working with another practitioner, certainly is beneficial to help you have a successful life. And success is defined by your own self, not by anybody else. All right, Laura.
So remember when we talked about straddles and strangles? So a straddle is selling the at the money put and call or buying it. So right now the market's pricing in the at the money put 75.40 put and call for 199, 200 points. If you were to sell that, you bring in 200 points. So your win risk is 73.38 to 77.38. And so the market's saying between now and expiration, we probably don't move more than 200 points. If we do, then the market is surprised by that.
Yeah.
So let's just say in theory, you want downside coverage. So you're going to buy that at the money put, and that would cost 101 points. So you make money below 74.36. And let's just say at 72.50, I just picked a number. 72.50, you're going to make 9,400.
So I guess, you know what, Laura, it just dawned on me, what, you know, as we continue to make new highs, how are people even taking a look at the extension and knowing where it extends and how it extends?
Yeah,
you know?
I mean, it's just straight up.
Well, I mean, are people using fib extensions or, you know, what methodology is helping them?
Yeah, the options market, what the market's saying, and then hedging that off. I don't know.
Yeah.
So let's do some, we're looking at out of the money's like 74.50.
Maybe we'll talk about that later on another time about how
Yeah.
to, yeah. It's probably important because I don't know. I mean, it seems that most of the people in here are experienced, and then with Peppered and with some people who don't. So that I think that would help people.
So what did I just say? We were spending 100 points. Yeah, that the money put. So let's do 4 out of the money put spreads. And we're spending the same 100 points. And at 72.50, I was making 9,400. At 72.50 now, I'm making 15,000. But anyway, my levels are different, so it's not, I should have picked a closer level. So, I mean, that's something to think about. If you're willing to spend X amount, you're better off to do cost spreads, put spreads, out of the money ratios. Either
With
cheaper or to get better bang for your buck if you get that move.
I like that.
Could even look at doing it in the weeklies or the shorter time frame. They're going to be cheaper, and so if you do get that big move, it's going to pay for itself 2 to 3x, 4x. So
I like it. I'll take it with me for sure. Thank you.
Yeah.
Any questions? Oh, going once.
Okay.
All right. Yeah, and people don't hesitate to message us privately if you have something on your mind and you want us to cover certain specific things, whether it has to do ads, options, and mindset. We'll be happy to address them. Okay. Have a great day, everybody. Thank you.
Okay. Thank you.
Bye-bye.